Namaste. A very warm welcome to all the listeners and viewers. I'm Mukta Kathuria Verma, Secretary to the Direct Access Committee, and I welcome you all for this webinar on charitable trusts. We have with us eminent faculties eminent faculties who will be taking us through this very important topic, which is recent developments and very crucial recent developments. At the outset, let me introduce Anil Sathi, who is a core speaker here. He has been a past president of Bombay Chartered Accountants Society, a former editor of Bombay Chartered Accountants Journal, and currently co-chairman of Taxation Committee. He has written articles in professional journals, BCA Journal, Chartered Accountants Journal, Income Tax Review, and Economic Times and magazines, Intelligent Investor and Outlook Money. He has co-authored many publications like issues on new scheme of taxation, firms, and voluntary disclosure of income scheme and analysis. And he has been presenting papers at residential and non-residential refresher courses organized by professional bodies. An eminent speaker, he has delivered several lectures at various places in the country for the Institute of Chartered Accountants of India, BCAS, and Chambers of Tax Consultants. He's also been guest faculty for Income Tax Department at NASEN, Nagpur, and Regional Training Center in Mumbai. He has also delivered lectures in Jawaharlal Vijay Institute of Management Studies, and has been a panel member of Charitable Trust Clinic conducted by the Bombay Chartered Accountants Society. A very warm welcome to you, sir. And along with him, we have another speaker, eminent faculty and a renowned expert, Mr. C. Akhil Jindal, who has been a recipient of Delhi Ratna Award in professional category in 2009. And he has also been a recipient of Faculty Award from NIRC. In tax practice since 1992, Dr. Akhil Jindal is a senior partner of Jindal and Company and has expertise including NPO, CSR, and charitable trust. He has been a regular contributor to the financial journals like Economic Times, National Express, and Outlook. He has been associated with the column Money Worries, appearing in the Economic Times on Sunday. He has also authored a book on exemptions, NPO, and has written various papers on the same and given more than 100 lectures on the charitable trust at various forums. I welcome you all, sir. Along with that, we have with us C.A. Sanjay Agarwalji, who is a Chairman Direct Access Committee. I request Sanjay sir to please take over the proceedings of the webinars. Thank you so much.
Thank you, Muktaji. I welcome all of you. Pujaniya Guruji, Dr. Girish Ahuja ji, Anil Sathe sir, and Akhil Jindal ji, and the panelist Rahul Agarwal, Girish Aneja ji, Vijay Gupta ji, and my Anil Raman Seth and Piyush Chhajak ji. Let me tell you, at the Direct Tax Committee, what we are doing these days is we are formulating various technical guides and guidance notes for which we have made various study groups, and those study groups are doing their job day and night, and we very soon will come with the technical guide on the charitable trust form 10B and 10BB. Since this is very cumbersome and very lengthy, and also there are a lot of issues in there, and as such, the Direct Tax Committee, we thought it fit that we will make some guidance note with the various experts. For that, we are doing the work. Then, since the tax audit guidance note is also required to be revised every year, it was made on the basis of the financial year. So that is also under the way. And then we are also trying to revise the entire tax audit reporting format, so that because of the view from the various stakeholders that there are certain clauses which are now no more redundant, or the assessees are already trained up enough and not much reporting is coming. So we are also doing that. The viewers, if you have anything clause which is new or which you want that we should revisit in the guidance note or in the 10B form also, that you may tell us at dtc@ici.in so that we can take your views also. We have a lot of panelists other than the speaker. They are the part of my study group, and as such, they are here to see it and note the various things which the speaker is going to introduce or will explain today. And especially Dr. Girish Ahuja, who's our mentor and is always available. And we call him on very short notice or otherwise. And we especially tell him topic only in the morning so that he doesn't get any time for preparation. Straight away, he should come to the webinar or seminar. Sir need no introduction, but let me tell you one special fact about it, that he has studied from Shriram College and then he teaches the Shriram College itself for entire his life. And finally, with us since 2002, sir, with the since 2002. And one fact is this, that I always say that Guruji should get that much light so that my children's children should also read from him or get the teaching from him. So this is the small introduction I would like to say about Guruji. That is why I kept that. Let me introduce the Dr. Girish Ahuja and Mukta take the privilege of introducing Anil Seth sir, Anil Sathe sir, sorry. Sir is also having a lot of attachment with us because Jen Gokhale was my first chairman in the directors committee when I entered into the council, and I have done my articleship under him in the council, and Anil Sathe is the partner of Jen Gokhale sir. Akhil is young and he is doing 90% job on the charitable trust, and all these things which have come as amendment, I will contribute 80% out of that for him. So with this background, let me just also request, if you find anything which you think that the DTC should do in the coming period, please do not hesitate to write us and or call us. We'll take care of that. Another one grievances for which I have floated one Google form. I have received around 500 queries, and we are analyzing those queries which are related to refund or wrong credits or double adding or not giving the credit or making some adjustment in 143(1)(a) in case of old, where certain improvements are required in the system. We are very soon going to meet the department after compilation of those. And also, we have today discussion about the tax clinic, which we are going to do it in the partnering with the government for increasing the tax base and helping the common citizen for filing their returns. With this, may I request Vice Chairman Piyush Chatterjee to begin with the background of the program. Thank you very much.
Thank you very much, Chairman Sir, Sanjay Agarwalji, for briefing introducing Ahuja Sir, senior faculty Shri Girish Ahuja Ji, other faculties Anil Sathe Ji, Akhil Jindal Ji, and other expert members of our DTC Direct Tax Committee of ICI who has joined this webinar as a panelist. So we will be, last month we had a lecture on Finance Act 2023 where Girish Ahuja Sir had spoken about it. And it was felt that we need to have a program. A lot of queries, questions came up on the charitable trust. And it was felt that we should have a 2 hours program on the charitable trust. And Ahuja Sir immediately agreed, as always, for the purpose of institute where he's always available. Ahuja Sir would be taking us through overview on the recent amendments in charitable trust. And we have 2 another eminent speakers, Anil Sathe Sir and Akhil Jindal Sir, who would be concentrating on the compliances of the charitable trust. So first we'll hear the Ahuja Sir on the recent amendments, and then we'll go to Anil Sathe Sir, Akhil Jindal Sir. Whatever questions have been sent by the panelists in the last, I will take for that purpose of, I will take those questions to the speakers and we'll try to resolve those. Meanwhile, because the experts are also available, as mentioned by Chairman Sir, and they may have some questions because they are part of study groups which is developing the technical material on behalf of Institute of Chartered Accountants. If they have any questions also, we'll put forward before the learned faculties and try to resolve that so that those also can be taken care of when those technical materials are been published. So with this, now I would start the program and I would request first welcome Girish Ahuja Sir to kindly present his overview on the recent amendments in charitable trust. Thank you, sir. Thank you, Ahuja sir. Over to you, Ahuja sir.
Chairman of the Directors Committee, of course, Central Council member, CA Sanjay Agarwal ji, CA Piyush Chhajar ji, Vice Chairman of the Directors Committee. The speakers with me, of course, CA Anil Sathe ji, CA Akhil Jindal ji, the panelists sitting in, I can see Raman Seth ji, Rahul Agarwal ji, Vijay Gupta ji, Kishore Shah ji. Above all, of course, the secretary of this Directors Committee, Mukta Kathuria Verma ji, because she said I am Mukta Kathuria Verma, so I'll have to speak only Mukta Kathuria Verma. Ladies and gentlemen. Well, friends, let me tell you one thing. Partly I am responsible for what has happened. I was at one time when we were redrafting the law, we said, what is the use of having section 1023C, VI, VIA and section 1112, where the educational institutions and medical institutions are finding place in both the places. Then what they said is that we are going to realign all the regimes. First regime, of course, 1023C. Second regime is 111230. They wanted to realign it because there are many things which were missing in 1023C. Let me tell you, I told them there was no law that you have to file a return before the due date specified under 139 months. Nothing was there under section 1023C that you will not be allowed exemption. There was nothing like 11.2 that if you want to accumulate more than 15%, there was no requirement of filing a form number 10. It only was 11.2 that you have to deposit the money under 11.5. There were so many things which were missing under 1023C, which were not there, which were there in 11.12.30. They wanted to realign it. After it was realigned, I told them, what is the need of having these two sections? Why are you not combining these? Why will you not combine these sections? Let us combine 1023C, IV, VI, VIA with section 11.12. What is the need of having separate section? They promised they will do it later. But now let me tell you, Sanjay ji, section 10, clause 23C. Firstly, let me tell you, it is always clause in section 10. There is no subsection. Section 10, clause 23C, Sanjay ji has 23 provisos. 23 provisos. And under proviso 3, there are 6 explanations. Explanation 1, explanation 2, explanation 3, explanation 4, explanation 5. Then they forgot that they want to have 2 more. 1A, 1B. So many explanations under proviso 3. There are explanations under other sections also. But 11.1 proviso 3, there is a lot of friction. There is an explanation under section 11.1 also. There are so many provisos. Let me tell you, one goes mad. One day I was laughing away. That's if you have to look for Ramanji, 16th proviso. How will you look 16th proviso? Is there any system? Is it written that it is 16th proviso or it is 19th proviso or it is 20th proviso? Nothing is written. You will have to pick up the act, find out which is the 16th one. How will you find out? Provided that will be the first proviso. Provided further that will become the second proviso. And thereafter, they will keep on adding also. Just say, I thank Sanjay ji, I thank this, and I also thank. And they have also put 21 also after 2 proviso. So whenever there is provided that, it is always first proviso. Whenever there is provided further that, it is second proviso. But if you have to look up the 16th proviso, start with also, that will be third. Next also will be fourth. Next also will be fifth. Next also will be sixth. Next also will be seventh. And you will have to go to 16th proviso. And if you miss any also in between, you have it. You have it if you miss any also in between. So you can imagine that 23 provisos, so many explanations under 1023C. And these are all for Sir, these are all for clause IV, clause V, clause VI, and VI subclause. This is not clause. Subclause VA, what you call IV, subclause V, subclause VI, and subclause VIA. Okay. They realigned the one, but still they could not realign everything. We have one explanation under section 11.1, and that explanation clause 2 talks about form 9A. That explanation is not there under section 10 clause 23C. Let me now come to the amendment which have been brought. Some required, some were not required, but they have done it. What is the first change which they have done, which was required? You all know that you have to file form 10 or form 9. Form 10 is filed for accumulating income more than 15%. You have a section 11.2 and you have an explanation also under section 23C proviso. You have to accumulate more than 15%. And you can accumulate for a maximum period of 5 years. Right, sir? 5 years. That is maximum. And you have to give the reason about for you are accumulating or the object for which you have. The question was, you are supposed to file your return of income by 31st of October. Right? Now, Form 10, if you file, earlier what was written is, Form 10 has to be filed on or before the due date mentioned under 139.1. Now, if you have to file return before the due date 139.1, and whereas the audit reports were supposed to file 1 month before the due date, that is up to 30th September. So where is the possibility of you are filing audit report on 30th September, you have to file a form on 10. How will a chartered accountant certify that form 10 has been correctly filed or that there is an accumulation more than 15%? They did not realize that. Now they have changed. Form 10. What is Form 10? Where you are accumulating more than 15%. You have to file Form 10. Now, please note, from assessment year 23-24, not 24-25, it is already now made applicable. You will have to file Form 10 at least 2 months prior to the due date mentioned under 139.1. 2 months prior. So that you have filed Form 10, thereafter audit report to be filed under 10B or 10BB. I told them what was the point of doing it. Why couldn't you do it along with 10B or 10BB? That means by 30th September. Now, how would you realize the audit will be completed even after 31st August? And sometimes what really happens is we find out there is a more amount to be accumulated. Now you have already filed form on 31st August. So Sanjay ji, form has to be filed by 31st August. That is Form 10. Now, if you are covered under section 11, 12, 13, there is one more form, which is called as 9A. So this is clause 2 of the explanation 1 under section 11.1, which is very relevant. There is a possibility that you are following mercantile system for receipt. I'm not talking about for expenditure. For expenditure, there is always now new law. But let me talk about receipt. There is an income which has accrued but not received during the year. How will you apply that income? How will you apply that income when it is not received? So therefore, under section 11, clause 2, I said, there is an income which is not received during the year. I can give an undertaking under form number 9A, say electronically, saying that I will apply this income in the year in which I receive it, or year following that. For example, suppose I have gone for fixed deposit for a period of 5 years, compound interest. Fixed deposit for a period of 5 years, Kishore Shahji, for a period of 5 years. Interest will accrue every year. And TDS will also be deducted every year. If at all it is, you have not taken any form, it will be deducted. But you have not received the income. So what will happen? You can give an undertaking under form number 9A, saying that I will apply this income in the year in which I receive it. But you are given concession also, or year following that. That means I can apply this income in the 5th year because it is a fixed deposit of 5 years plus 1 year, 6th year I have to apply. You have to give an undertaking under form number 9 electronically. The date to be filed was due date of return 139.1. Now they realize this also is wrong. So now it is due at least 2 months prior to the due date under section 139. That means by 31st August, you will have to file form number 9A electronically. If you have an income which is accrued but not received, you can give an undertaking. I will apply this income in the year in which I receive or year following that. Find it. Mind it, Ramanji. This is only available under 11 benefit. This is not available under 1023C. Form 9A is not available under Form 1023C. If you are going to have a guidance note, so please be careful about that. Form 9A. And second is Form 9A is that for any other reason, you could not spend the money. For any other reason. It may be possible I received donation on 29th March or 28th March or 30th March. I hardly have any time to spend that money. So they say you can give an undertaking in form number 9A that I'll apply this income next year. It is next year. And you can give this undertaking. Now mind it, explanation 2, subsection section 11.1, now 9A, for 2 purposes you can file, but that should be filed at least 2 months. Sir, at least should be 2 months prior to the, should be filed at least 2 months prior to the due date of return under 139. Clear, sir? At least 2 months. Form 9A, at least 2 months from this year only. 31st August 2023, you will have to file Form 9A if required, or you will have to file Form 10 if required. This is applicable from assessment year 23-24 and not from 24-25. Next. I am responsible for this, but that was not a reason for that. What I said to them was, look here, you have borrowed money, loan. And when the loan is taken, it is not an income. Loan is not an income. Then if I have purchased any property by taking a loan, then how can you treat it as an application? People were taking it, Akhilji, people were taking it as an application. I had always been telling to the people that look here, loan or borrowing is not an income. Suppose I have 1 crore with me. I want to buy a building for 3 crore. I borrowed a loan of 2 crore. This loan 2 crore is not an income. So my application during the year is not 3 crore. My application is only 1 crore. But people were taking 3 crore and they were doing it. But I had been telling them for several years that it is not an application. Then the better sense prevailed and they came out with an amendment in 22 saying that loan and borrowing is not an income. And if you apply anything from the loan and borrowing, it will not be treated as an application. However, in a subsequent year, when the loan is repaid, that will be treated as application. Am I right, sir? When the loan is repaid, it will be treated as application. Was it not correct? It was like that. I have nothing to do with accountancy. Accountancy, you may say 3 crore is an application. Strategy, you have to tell me 3 crore is an application. But when I'm taken a loan is not an income. How can this 2 crore be taken as an application? I said, no, it is not possible. Whenever you repay the loan, along with interest, that will be treated as application. And this they have accepted. And they did it. Very good. I really appreciated them. But I didn't know that they are going to bring havoc to us. Now, what have they done? 3 amendments. In this loan, I will talk about corpus also, but for loan, 3 amendments. 1, loan will have to be repaid within a period of 5 years. Then only it will be treated as application. How can I do it? Strategy, I have taken a term loan for construction of a building or for purchase of a building. The term loan is, let's say, a period of 15 years. And you are saying, when you have taken a loan for, let's say, 3 crore, it is not an application. Capital expenditure should be an application. It is not an application. When I repay the loan, then only it will be treated as application. Am I right, sir? But it is a period of 5 years, 15 years. Now they said, no, if you refund the loan, repay the loan within a period of 5 years, then only it will be treated as an application. I'm really surprised. I had given my note also through institute also. I went personally there and I talked to them today also. They said we discussed it and we did not find any merit in it. I'm really surprised. Where is not the merit? How do you expect me to pay back the loan within a period of 5 years when the loan section is for 15 years? But they have said nothing. And second point, moreover, whenever you are applying this loan, kindly note, there should not be any specified violation in that particular year. There's no specified violation in that particular year. What is that violation? There is no violation of 40AI, 40A3, 40A3A, no violation of that. There is no donation to any corpus trust. That is also a violation if it is going to do that. You will have to file your level 2 on due time. And every violation they have said, the violation or that should money not be used outside India. And then that violation is that you will be allowed only on payment basis expense and not on the due basis. Third point, I'm very surprised. Sir, very surprised strategy. Any loan or borrowing taken up to 31st March 2021, I'm really surprised. The repayment of that loan will not be treated as application. They are assuming that everybody has treated that loan as application in the past. And they are shouting at me. Shouting, I will not say, they never shout at me. They are saying us, sir, you told us that loan is not an income. So the application out of the loan will be not an income. Whenever you refund the loan, we will take it an application. Now, sir, what we have done in the earlier return up to 31st March 21, we have not taken loan as an application. And now they are saying this will not be allowed as an application. I'm really surprised. I'm really surprised. They should have said those who have claimed as an application will not be allowed. Those who have not claimed as an application should be allowed as a repayment, but they have done. So 3 conditions now. Loan to be repaid within a period of 5 years. 2, no specified violation when you are given a loan. And 3, loan up to 31st March 21, no question of any application if it is repaid. Am I right, Akhilji?
Yes.
Coming to the corpus. Now, this was also very true. Corpus itself is exempt. When there is a voluntary contribution with a specific direction that it will form part of a corpus of trust, it is exempt under 11(1)(d). Mind it, Anilji, it was not exempt under 1023C earlier. It was not exempt under 1023C earlier. I told them, what is this? One place you are exempting them, 1023, you are not exempting them. They came out with the amendment, agreed. Very good. That corpus, voluntary contribution with a specific direction that it will form part of the corpus of trust is exempt under 11(1)(d) or under 1023C. Clear, sir? Now, since it is exempt, if you apply any amount out of it, it should not be treated as an application. And let me tell you, sir, panelist, corpus relation can be of 2 types. One, specific corpus. The another is general corpus. Please do write that. Specific corpus is for a specified purpose. General corpus, they don't give you the purpose for which you are going to utilize. Normally, we don't utilize the corpus. But if you utilize the corpus, they say it is not an application. Obviously, when it is already exempt, how can you treat it as an application? But then there is a judgment which they overruled about excess application was treated as an application of the subsequent year. That judgment of Supreme Court was overruled. So then they said, okay, the way the corpus donation received is exempt. But please note that if you have spent any money out of the corpus donation, it is not an application. However, in a subsequent year, if you repay the money to the corpus, we will treat it as an application. Very good. I really appreciated them. Okay, when you have overruled the judgment of the Supreme Court, at least you were given a benefit that we can pay back the money and keep our corpus intact, and we will get it as an exemption. Who knew that they will put a restriction here also? 3 restrictions. 3 restrictions again, same like loan and borrowing. Any corpus up to 31st March 21, even if you refill, no question of any application. I'm really surprised. Number 2, corpus to be refilled must be within a period of 5 years. 5 years. Now also the limit is imposed that you have to, if you have used a corpus, then you should repay or refill the corpus within a period of 5 years from the end of the previous year in which the corpus was used. Am I right, sir? This is the second. And third, there should not be any specified violation under section given under explanation 2, explanation 3, explanation 5, 11.1c, or the specified variation under 13.1c, specified variation under explanation to section 11. No specified variation at that time. Then only you will be given the benefit of this exemption. So this is the another point which I wanted to tell you. I'm really surprised nobody listens here now. Gone are the days where they used to listen us. I remember nobody has ever said to me anything, and they were listening to us and they were doing very good things. But suddenly, what really has happened, I failed to understand. I have told them, sir, at least look into the picture. What is this loan? You are payment of 5 years, you cannot do it. Personal loan, I agree. Sateji, I agree, personal loan they are giving and they are not defunding. There I am fully agree that personal loan. But if you have taken a loan from a financial institution, they could have given an exemption that this will not be applicable in case the loan or money is borrowed from financial institution. This is what I told them. That if I borrow from financial institution, kindly allow me to refund within the time limit for that. But they have not given that benefit. I can't help it. But next one, a good thing. Some mistake they commit. Sir Sateji, if I have started a new trust, I have to apply 1 month before the commencement of the previous year relevant to the assessment year in which, for which the registration is sought. Am I right, sir? 1 month before. But the point is, if I have commenced already an activity, I have already commenced an activity, then what will happen? Because I might not have taken registration earlier. Or there may be second thing. I have committed an activity, but I have to first apply for provisional registration. And within 6 months from the commencement of activity, I have to apply for regular registration. Am I right, sir? This was the law. 90% people have not applied within 6 months. They had already commenced the activity. They should have applied within 6 months after receiving the provisional certificate. Provisional certificate was valid for a period of 3 years, but it was told that if you have commenced the activities, then you should apply for regular registration for a period of 5 years within a period of 6 months. I failed to understand what will happen to them. I'll come to 115 TD and will come to subsection 3, clause 3I of that TD. You will note what is going to happen there. But at the same time, what I'm trying to explain, now better sense is prevailed. They have said, Sateji, meri baat suni. If you have not commenced the activity, if you have not commenced any activity of a charitable trust, you can apply 1 month before the commencement of the previous year, relevant to the assessment year for which registration is sought. That is provisional certificate you will get. I'm ready. Provisional is not a final. Provisional, they may not give you exemption at all. But once you apply for regular, they may say, we will not give you. Even provisional will become taxable. So good sense, because if I had applied for after commencement and I'm given provisional, and after 6 months I apply, they will say, we will not give you exemption because you don't satisfy the conditions. So they said, if it has not commenced, you can apply 1 month before. I would like you to know, what do you mean by 1 month before? I would like to ask the two panelists here, Akhil Jindal ji and Sate Saab, what do you mean by 1 month before the commencement of the previous year relevant to the assessment year for which registration is sought or for which approval is sought? Kya matlab hai iska, sir? 1 month before. How would you calculate 1 month before?
In the assessment, in my view, in the case of assessment year, the previous year ending, let's say if the assessment year is 23-24, and then it will be before, previous year is ending on 31st March 23. So you should apply by 20th.
1 month before the commencement, please. 1 month before the commencement. That means you should apply by February 22. Am I right, sir? Hello, Sate Saab. सबने कहा हाँ, मैं कहता हूं ना. ऐसा भी तो हो सकता है. Previous year can be less than 12 months. सर ये उनको भी नहीं पता. वो लिख रहे 13 महीने पहले अप्लाई करना पड़ेगा. अरे भाई साहब, मेरे पास पैन नंबर ही नहीं होगा, मैं अप्लाई कैसे करूंगा? How will you apply electronically? Form number for registration under 10A. You don't have a PAN also. You have just started your trust. You have to apply for PAN. Then only you can go for registration. So my point is, Sate Saab, I can have a previous year starting from 1st October. Why can't I be here? मैंने कमेंट से 1 अक्टूबर को किया, तो मुझे अप्रैल में तो पता ही नहीं था मैं ट्रस्ट बनाऊंगा. First previous year can be less than 12 months according to me, sir. Am I right? Am I right, sir? First previous year can be less than 12 months. Further previous year can be 12 months. First हो सकता है. तो मैं ये कहता हूं, मैंने शुरू ही जनवरी में किया है. अगर मैंने कमेंट्स करना है या नॉट नया ट्रस्ट बनाया है, it has not commenced activity, but trust is created. I might have created on 1st January. Am I required to create a trust only on 1st April? How can this be possible? So I can apply 1 month before that January also. Am I right, sir? Do you agree with me? If you don't agree, please, you have full right to comment on that. But according to me, first previous year can be less than 12 months. It will commence from 1st January and will end on 31st March. So I can apply 1 month before. Akhil ji, am I right or wrong? ये पॉइंट बड़ा इंपॉर्टेंट है. कईयों ने आर्टिकल लिखे हैं 13 months before the commencement of assessment year. सर, पढ़े लिखों को कोई वो दिक्कत नहीं है, किताब खोली और देखी. So मैं ये इसका आंसर चाहता हूं before we proceed further, because we have expert panelist in front of me. देखिए, गलती कोई भी कर सकता है, ये नहीं कहिए. I have whatever learned from my juniors. So please let us discuss this issue. Can I apply do I have to apply by 28th of February, 1 month before?
I think
do I have to apply by 28th February, or can I apply during the current year also? But 1 month before the commencement of the previous year. Sanjay Agarwal sir, your view on that? Piyush sir, your view on that?
I think their intention was before the closing of that previous year, 1 month before, because but their intention
before the commencement, 1 month before the commencement. No, intention नहीं थी, शुरू से यही था. 1 month before the commencement of the previous year, relevant to the assessment year for which registration or approval is sought. Am I right, sir? साठे साहब ने देखा. Sir, please.
What Girish ji is trying to say is that he is drawing strength from section 3, the proviso.
Correct.
If you look at the proviso, it says that where you commence business or profession for the first time,
source of income.
Source of income.
No, source of income also.
So therefore, he is drawing inspiration from that proviso to say that normally, yes, it would be the 12 months preceding the assessment year, but in a scenario where that source of income commences during that year, it will commence from that point of time, is what he wants to say. I have got what he wants to say.
My is, according to me, it is not 13 months. According to me, first previous year can be less than 12 months. As per the proviso under section 3, which you have mentioned. So therefore, let us, these can be a subject of debate. But what I'm trying to explain, I can take a plea that I am starting my trust only in January. I visualize the idea only in the month of January, or maybe, or I started income in the month of January. So I can apply 1 month before. Immediately commencement, I have started earning income. The donation is also an income, sir. Donation is also an income.
So it will be a good argument in a case where there is a difficulty. Yes, sir.
Correct, sir. Coming back. So now if you have already commenced the activity, now they have said, look here, we'll give you regular registration. No question of provisional registration. New law, and we'll correct it. You are giving me a provisional registration, and later on when I apply for regular registration, you may say, no, you are not a charitable purpose. Then I will have to pay tax on the earlier income also. Now they very correctly said that if you have no income which is excluded under 1023C or 1112, before making an application, you can make an application under Form 10A, but it is not a provisional registration. It will be a regular registration for which they will call all the documents, they will call all the accounts, documents, then they will give you opportunity of hearing if you have to reject or if you have not to reject, accept, and then only you will be given a regular registration for a period of 5 years. According to me, this is not bad. This is correct. According to me, this is correct. You may have different opinion, but according to me, if there are so many trusts which are not registered, Now they want to get
Sir, that is where my point is, that in such a scenario, why delete the provisos to 12AA?
Sir, what proviso they have deleted, they don't want. That proviso was that, of course, that if you have been given registration now, your case will not, if any case is pending, you will be given a benefit of exemption, or you will not be issued any notice under. This has become redundant because of the new law.
That's not the case. That's not the case.
That's not the case. I agree. The provisos have been deleted.
For no reason.
I fully agree with you, but they don't want to listen. They don't want to listen. I fully agree. This proviso was brought much later because they knew it that people, there are, sir, these days, there are many charitable and religious institutions which are not registered. There are many. And you know that if they get any sum more than 50,000 as donation, they will be covered under 56 subsection 2 clause 10 with effect from 1st April 2017. Prior to 1st April 2017, 52.7 was applicable for individual ritual. Now 56.210 is applicable for all types of persons. Now if a temple received donation for more than 50,000 in a year, and how can you say a temple is not getting a donation more than 50,000 a year? The entire amount, please note, gross amount. It's not the expenses will not be allowed. The gross. I told them that you could continue with that proviso. They have not done it. Now I'm with folded. I'm telling everybody, please apply for registration. Those registered, they will be caught because of the technology. Now they are being caught, and then they're having a lot of difficulties in that. The registration must be sought. Otherwise, I'm telling you, you will all be put to trouble under section 56, subsection 2, clause 10. Clear, sir? Clear? This was also I wanted to point out, which was there and should have been changed, but they have not noticed that point. What I want to say is this. Now, whatever amendments I'm telling you, the similar amendments are there in 1023C. Similar, no difference. Similar amendments under 1023C for approval, here it is a registration. Under 1023, there is a approval. Under section 1112, there is a registration. That is the only difference, approval or registration. Otherwise, where is the difference? There is absolutely no difference, I'm telling you. But this is what I wanted to say. Another point, very interesting. I make a donation to another charitable trust out of my current income. Out of my current income. Accumulated income, you are not allowed. Out of my current income, I make a donation to another trust, charitable trust. Earlier, I was allowed 100% exemption. And that was forming part of 85%. Am I right, sir? I could accumulate 15%, balance 85%. Out of that, I could donate to any other trust, and I was getting the benefit of 100% of that. Now, what have they said? Any amount paid or credited during the year to any other trust, the exemption shall be allowed. Application should be, not the application, the application shall be treated as 85% of the amount given. Suppose I have given 1 crore to the another trust. I will be treated as application 85%. 85 lakh. That is, I have given 1 crore, but it is 85 lakh. So will 15 lakh be taxable? I have given 1 crore, it is 85 lakh. Will 15 lakh be taxable? If I say I don't accumulate 15%, then what will happen? I have given 15 to allowed. I have a point, Anil Sate, sir. Suppose I have 2 crore. 1 crore I could accumulate, I have, let's say, 1 crore. I could accumulate 15 lakh. Am I right, sir? Suppose this 1 crore is donated. And you said you will be treated as 85% application. Balance 15% can be treated as accumulated or not, or used from accumulated fund of the earlier year, or used from the corpus. This is the issue. Or will I have to pay tax on that 15 lakh? Will I have to pay tax on?
On a plain reading of the law, you will have to pay tax on 15 lakhs because, in my opinion, you can accumulate something. You can be, section 11 begins with the words accumulated or set apart. You can accumulate or set apart something which you possess. If you have donated 1 crore, you don't possess that 1 crore. So therefore, once 85% is treated as
say,
application, then
I have given this 15% out of the accumulated income, and please don't treat it as an application. Please don't treat it as an application.
So
I have accumulated income. I paid 15 lakh from there. Please don't treat it as an application.
But sir, you are taking an example when there is a possibility of prior year. Take a case that it is the first year.
We agree. That case it has to be paid. But take a case, I have a general corpus. I want to give from corpus. Let us not try as an application.
That's fine.
My point is, these are points of debate. These are points of debate. According to me, the intention is that you will have to pay 15%. Hanji, Akhil ji.
My only with so many years that this is a deemed accumulation, sir. You don't have to possess or you don't have to actually accumulate. The 15% allowed under Section 11.
But
it is a deemed. Nothing has to. There have been.
You are giving rise to litigation where it was unnecessary.
But the reason why they.
What is deemed application? Please.
Deemed accumulation, not application. Accumulation.
1 crore, I have spent the entire 1 crore. Where is the question of accumulation? Please. Out of 1 crore, I have applied 90 lakh. I can accumulate only 10. Where is the deemed? Where is the deemed? If I have got 1 crore, I spent 1 crore. Where is the question of accumulation? I have to set apart. It cannot be done. If I have spent, there is no question of a deemed application. I don't agree.
The only view the income tax when they had it, that only you have to apply 85% and 15% don't have to accumulate. Nothing has to be done to that. If you if you don't accumulate, it will not be liable to tax. There are various
Sir, 1 minute. They have said the purpose was different. The purpose was tax planning. I used to donate 1 crore application. Then they might donate to some other application also. My money they may spend. Their own money they may give to somebody. To avoid that type of a thing, they had said that I will treat as 85%. But the language is so bad. I don't feel that according to literal reading, what Mr. Sate is saying, that 15% should become taxable in your hand. Yes. That you will have to pay tax every year whenever you donate. Whenever you donate, you will have to pay tax. Am I right?
Yes.
Sanjay ji, you have to check up this point. My point is, I'm donating, but I'm using my corpus, general corpus. I'm donating. I'm using my old 15%. And that is not application. Sir, you have to make it clear. Sir, otherwise, everyone who makes a donation will be put into a difficulty because he will have to pay tax on that 15%. Am I right, sir? 85%.
Guruji will flag this issue, but in any case, that intention is not there that they should tax the 15%.
Never.
Sir, please don't tell me that. Sate Saab agrees with me that the intention is that language if you look up, please get it clarified. I'm telling you clarified. Please get it clarified. I can use my old 15%.
representation.
Sir, उन्होंने 85% एप्लीकेशन माना है. मैं 85 ले लेता हूँ. 1 करोड़ रुपया मैंने खर्च कर दिया, 85 ले लेता हूँ. तो क्या मुझे अलाउड होगा? सुनिए, मेरे पास 2 करोड़ आए. सर 1 करोड़ मैंने खर्च कर दिया, 1 करोड़ डोनेट कर दिया. ठीक है, मैं 30 लाख तो एक्यूमुलेट कर सकता था. मैंने 85 दे दिया तो 15 एक्यूमुलेट समझ मान लो. ये भी तो पूछा सर संजय जी. I have 2 crore received. 1 crore I spent. 1 crore I donated. I was allowed to accumulate 15%. I will say to you are allowing me 85. So 1 crore 85, 15% accumulated. But accumulate to why nahi? Wo to given hai.
No, Guruji. The thing is this. Suppose I receive 2 crore. I first of all reduce, just like normally people say.
No sir, first of all nahi hota ye. ये सब गलत है. First of all applied होता है. Applied अगर पूरा कर दिया तो फिर 15% कहाँ से होगा?
Yes, then it is not there. But in this case,
you have to set apart
negative application.
You have not to spend that money. Set apart accumulate का मतलब you don't have to spend that money.
The misconception is that 15% is a standard deduction, which it is not.
No, not at all.
No, that is true. If you spend, then it is not. But if you are not spending, then it is allowable. So let us flag this issue.
Then you have accumulated.
Yes,
I think, please. There is a difference. If I spend 2 crore out of 2 crore,
No issue.
I'm not allowed to accumulate anything because I'm nothing left with me. Nothing
Yes.
left with me. If I spend 1 crore 90 lakh, I can only accumulate
10.
10 lakh because left with me is only 10 lakh. If I spend 170, I can accumulate 30 lakh. If I spend 150, I can accumulate only 30 lakh. 20 में तो टैक्स देना पड़ेगा ना, लॉ तो यही है ना.
नहीं,
So my point is, I got 2 crore अखिल जी, 1 करोड़ मैंने खर्च कर दिया, 1 मैंने डोनेशन दे दी, तो मुझे accumulate मानेंगे? मानेंगे? ओके, आपने डोनेट दे दी तो accumulate कहाँ किया? Set apart कहाँ किया?
The word
hello.
accumulate or set apart will presuppose possession.
Yes.
Where is that?
But sir, we
So let us, Guruji, let us not fight on this issue.
Okay.
We'll flag
We'll
issue.
go further.
We'll flag-
We
we'll
are
flag-
not fighting. It is academic discussion.
No, that
Please
is
don't
true.
tell me that we are fighting. It
No,
is
no.
academic. What is the use of
रह जाएगा.
having a seminar where we can't discuss each other? That these are the issues which are very important.
We'll flag. We'll flag.
Very good, sir. My time for amendment over. You can take over.
No. All.
No, but
no.
time is over. There is nothing much left. For
No, you
current amendment,
continue.
there is nothing left. If you have anything, you tell me. I'll do that. मेरे पास तो बहुत कुछ है. I can speak for 8 hours on this charitable trust.
Yeah, I
but
know.
we have 2 speakers with me, and they have to fill up. मैं एक और बता दूं. Please note that you have to file Form 10B. When you have to file Form 10B, when your income gross receipt is more than 5 crore, or you are having foreign contribution, or you are spending money outside India, then only 5 crore. Then 10B, otherwise 10BB. So 10B कब आता है? One case when gross receipt exceeds rupees 5 crore.
5 crore.
Or there is a foreign contribution receipt. Or there is amount spent outside India. उन सब केस में 10B देना है. वहां 5 करोड़ की लिमिट नहीं है. वहां 5 करोड़ की लिमिट नहीं है. वो तो सेपरेट क्लॉज है.
Separate clause.
वो अच्छा, इसके लिए 11-12 के लिए रूल 17B है, लेकिन 1023 के लिए रूल 16CC है. लेकिन दोनों की लैंग्वेज सिमिलर है. नो डिफरेंस. एम आई राइट?
Yes.
बाकी तो टेक ओवर सर. साठे साहब बैठे हैं, जिंदल जी बैठे हैं.
I will just
Hey.
take one minute of yours, Giriji, since you're
Sure,
here.
sir, sure.
The limited issue is that, as you said, application outside India. Now the question is that
11C.
11. So the point is, suppose you spend monies outside India for purposes in India, what will happen? In the sense that there may be a genuine situation where you apply money outside India for purposes in India.
Yes.
There could be
You
difficulty.
might have
in-
purchased a machine.
Absolutely. So there the reporting
My point
situation.
They have only said 10B form. They have not said anything. Fill up form 10B, that's all. They want the 10B to be filled, not 10BB. All other cases 10BB. 3 cases 10B.
Sure.
Whether you are under 1023C or you are under 1112, 3 cases 10B. 10B is 5 crore gross receipt, 2 foreign contribution, 3 money spent outside.
Money.
Correct, sir?
Yes, sir.
Now take over, sir. Thank you very much.
May I request any panelists if they have any query so that we can go
नहीं,
through
मैं
it.
सुनूंगा, sir. I will listen to
I
it.
know it, sir. I know it, sir. I know it. अभी सर आपको जाने कहाँ दे रहे हैं? Thing is this, I am also not leaving. You know, the entire seminar I have to be present. Other I will be punished by saying no in the next seminar. I want you to be there.
Sir, I am very. There are at least 5 people in front of me. I always say that please, all of you should be in front of me so that I can talk to them. They are not showing their faces. They are not showing their faces. Raman said it is very the way. Charger Saab, chalo, he will come back. Now, Kishore was there earlier. Now he has come back. Of course, Vijay Gupta has now come back. Sir, show your face. At least we can talk to you. We can know that are you understanding. We can see your face. You can see my face. We can फेसलेस तो है सब कुछ, लेकिन यहाँ तो फेसलेस नहीं होना चाहिए. और एक और बात है, फेसलेस में भी अब अलाउड है हियरिंग में. आपस में फोटो देखना. तो प्लीज कंटिन्यू विद दैट सो दैट वी नो whom I talking to. अभी पंकज जैन सामने आ गए, विजय गुप्ता जी आ गए, राहुल आके चला गया. तो चलिए सर, थैंक यू वेरी मच. टेक ओवर सर.
Yes, sir.
So thank you, Guruji, for enlightening us with all this and various issue. Piyush bhai,
Yes, sir.
yeah, next.
You
Thank
want
you very much, Girish sir, for such an strong discussion, robust discussions, too many questions, I'm sure. Now I would request, before we go to question and answer session, there are already so many questions, Girish bhai, and a lot of things have been addressed also. So first we'll move to Anil Strategy, who would now address on the compliance.
And I will talk about section 13.9, 13.10 also later. 13. And one more. Let me add one thing.
Please,
Sorry, sir.
Yeah,
One
sure.
minute I missed.
no issue, sir.
Sir, you can file a return of income under section 139.4 also. I'm really surprised.
Yes.
The intention was not there, but I'll tell you later. Section 13.10, 13.9, then I'll tell you what has happened. Earlier, they had committed a mistake that you have to file a return under this section, 39, under section 139. Then they realized, what about 8A? Then they realized 39.4 they have added. They have given the concession of filing a return of income which is belated, and still you will get an exemption under 11.12. I'm really surprised. You will get exemption under 11.12. But when you read section 13.9 and 13, I will come back to you at that time. You now continue, sir.
Right, sir. Welcome, Anil bhai. I will request you, Anil ji, to please address, sir.
Sure. Yes. We've just heard Girish ji, and he's promised to come back with 13.9 and 13.10, and I'm more than eager to hear that. The time of this webinar is 6 to 8, and I'm supposed to cover a part of the compliances, leaving the rest to Akhil, because I had decided that ultimately the maximum should be left to the younger one. So though he's not as young but still his hair is still black. So therefore one can say that he's young enough. So what I will do is I will deal primarily with the audit report and the nuances therein, and leave the balance of the compliances which are innumerable to Akhil. The time that was allotted to us is around 40-50 minutes. It's for covering a topic like the audit report. It's very, very short, but we are in IPL season, so we are used to, the strike rate. So with that, what I propose to do is I will deal with only the principal issues that will arise in the audit report, and then cover some of the major clauses where the auditor will have to pay adequate attention.
Sir, just to interfere.
Yes.
You can take your time. Normally, we have given time 6 to 8. But if the question answer or you have to come back after Akhil bhai, so you can come back also, as Guruji has already said. So we can extend up to around 8:15 or 8:20 also.
All right. Sure, sir. Thank you very much.
Please continue.
So there are two aspects which I want to highlight, and this comes out of my experience as a tax counsel, because there is a possibility of a large young audience. This is what I want to say, is that many a time we auditors don't treat an audit under the Trust Act or for income tax purposes with the same degree of seriousness that we would ordinarily treat another audit. And the rationale and reason for that, as has often come to me, is that, sir, because it often happens that in industrial houses you file all their returns, they would ask you to do an audit of a charitable trust which has been formed by the industrial group. They don't pay you the same degree of fees that they would be paying for other work. But mark my words, you have to pay attention to an audit to a far greater degree in a charitable trust audit than you would have to even in the case of a listed company. The reason for that is, and I'm saying this is not strictly within the technical topic, but at times I feel sorry when people say this, is that ultimately when you do an audit of a public charitable trust, your obligation and responsibility is towards the public at large. And that's a far greater responsibility than even doing a listed company. So with that, let me just begin with saying that they have increased the ambit of the audit under charitable trust. Form 10B primarily. I'm taking 10B because that would cover a larger number of clauses. Though, as Giriji said, you have the option of lesser than 5 crores and people who don't have that expenditure outside India and FCRA to adopt 10BB. But both have been significantly extended. 10B, as it originally stood in from 1973, and it guidance, technical guidance rightly mentions that from 1973 to 2023, we did not have a change. But now we have a change after 50 years, which is of such a great expanse that it makes me shiver. From 8 clauses in the original 10B, you have 48 clauses in the 10B, 32 clauses in 10BB. You have 28 schedules in 10B. You have 7 schedules in 10BB. You have 11 explanatory notes below the form in 10B. You have 7 notes in 10BB. That is the degree of expanse. Now, let me also point out 2 very important things. What changed by after Finance Act 2022 and 23? One, there was a prescription in of the books of account to be maintained by way of induction of Rule 17AA. So you have a prescription of books of account to be maintained. That in itself is not a very great dampener because by and large, you would have been maintaining those accounts even earlier. The only thing is far greater quantum of details are now required in that particular maintenance of books. The second and the more important part is the change in Form 10B. And I'll just point out 2 or 3 important nuances in the main audit report itself before we go to the clauses. What is that change? The first primary change is that you now have to certify that your details, you have what is your certification? You have to certify that your books of account, proper books of account have to be maintained. Just look at the distinction. Section 12A, B, subclause 1 prescribes accounts, the books of accounts to be maintained, but your audit report requires you to certify whether proper books of account have been maintained. So that's a lesser responsibility. You don't have to certify that prescribed books have to be maintained, but proper books have to be maintained. The second important difference is that now you have to certify that the particulars as given in the annexure are true and correct. That assertion was absent in the earlier Form 10B. Earlier, if you see, you had to express an opinion only on the true and fair view. And you used to say at the end, the particulars are annexed. There was no comment in Form 10B, nor was there an assertion. That specific assertion comes in Form 10B now. So you have to certify that the particulars are true and correct, subject to your qualifications and observations. And remember, this is a far greater onerous responsibility that you have. I would strongly suggest that you make your clients aware of the degree of difficulty in maintenance of all this record before you embark on an audit. Yes, I'm conscious of the fact that those particulars have to be compiled by the auditee, undoubtedly. But you have to certify them as true and correct, which to my mind is an onerous responsibility. One more factor. What does 10B say? In my opinion, proper books of account have been maintained at the registered office of the named fund, trust or institution, etc. at the address mentioned at serial number 14 of the annexure. So what are you certifying? You are certifying that proper books are maintained and they are maintained at the address mentioned in serial number 14. Now, this is important. This is important, and that same assertion is there in 10BB as well. Why? Because in the case of smaller entities, you may have somebody giving the accounting services. He may be maintaining those books of account. And therefore, the assertion that you make about agreement of financial statements with the books of account also has to have a further assertion that they are maintained at the place mentioned in Annexure 14. That is not an insignificant assertion. And mark my words, that once you have surveys, let me tell you that the days where trusts were treated leniently and charitably are gone. You will have more surveys. And when those surveys become a reality, the assertion in the audit report will become important. So therefore, please be very, very careful about the audit report declaration. One more factor before I go into the clauses per se is that 12A contains the conditions on the basis of which you claim an exemption under section 11. So therefore, 12AB subclause 1 and 2 are both conditions which you have to satisfy before you come to a conclusion that you are eligible for 11. So therefore, the maintenance of books of accounts which are prescribed by Rule 17AA, the conducting of audit as is mandated by 12AB subclause 2, and the furnishing of the report by the due date, which is the specified date, are all conditions of the exemption. Now, if they are conditions of the exemption, that is mandatory to avail of. So should you fail, forget the everything else, section 13 or everything else. If you fail the test of not maintaining prescribed books of account or not conducting an audit as is mandated and not furnishing the audit report, you fail the test of the exemption. So therefore, that is something which you would all do very, very well to remember. Now, this is as far as the main audit report goes. What I would suggest to everyone is that they should take a proper engagement letter, which is of course mandated by the standards, as well as a proper assertion from the auditee of the books were maintained, list of books maintained, and where maintained. All of that is extremely important. Now, with this, let me go into the clauses of Form 10B. As I said right at the outset, I will refer to only the clauses very quickly and make a comment where I believe some value addition is there in terms of your contribution as an auditor. As I said, the first few clauses, that the first 13 clauses, one more factor before I go into the clauses. There is one more assertion that you are making, because at the end, though frankly it is bad drafting of English language, if you see in the case of income expenditure account or profit and loss account of the income and application, so therefore you're not only certifying the balance sheet as a statement of affairs, you're also certifying the application. Now that also will carry some weight at some point of time. So these are the changes in the main audit report. Now with that, let's look at the various clauses. The first 13 clauses are of general nature, that they give PAN, address, and things of that sort. Those I would call general information clauses. Clause 14 sets out the location at which books of account are maintained. And mark this very importantly. When the books of account are maintained at a place other than the registered office, then the trust has to pass a resolution saying where they are maintained, and within 7 days of passing such a resolution, the jurisdictional officer has to be informed of where those books of account are to be maintained. Now, this is important. As I said right at the outset, the days where charitable trusts were not surveyed or searched are gone. So you will have that happening in the near future. This reporting at that point of time will be important. Clauses 15 to 18 are activity-based information and authentication of information which is submitted by the auditee. Now, this is important because these are clauses which deal with the activity of the auditee. And the auditee is to assert as to whether what he is carrying on is a business or otherwise. Therefore, that is basically a question of interpretation, because 215 proviso gives various conditions. One is that yes, 215 proviso will, after its attraction, continue with the exemption only. The first prime condition is that the business, first of all, you have to carry on a business. If you carry on a business, it must be in the course of pursuance of your objects, and then it must be incidental with books of account being maintained separately, and then it must satisfy the parameters of the percentage. All these details and the particulars are compiled by the auditee, but as an auditor, you will have to certify that they are true and correct. And remember, true and correct is a phrase different and distinct from true and fair. So therefore, this is an onerous responsibility. Please take care. Clause 19 requires compilers, and it is from where income of the auditee tax is withheld. You will have to compile that. The purpose is that there will be a comparison with 26 AS. So,
Sir, Dr. Girish Oja wanted to say something.
Yes.
Take a minute, sir.
Yes, sir.
Just wanted to say, according to me, Section 2, Clause 15 proviso is only applicable for the 7th lip so far. So we will have to tell them, look, for the first 6 limb, you have not to bother. It is 11.4a. But of course, for the 7th limb, because the judgment has come, that's what I'm saying.
I appreciate, sir. The only problem that I have is like this, is that one of the particulars that you have to mention in the annexure is your objects.
Yes.
Now, the Supreme Court says that if you are in 1023C, you have to be solely for education, which means that if you have another object which is not an educational object, and again, sir, what I'm really worried about is not only if somebody reads the law substantively, fine. You are asking the auditee to fill in particulars by way of codes. Those objects have to be classified by codes.
I fully agree, sir, with you for 1023C, because that is a new noble educational society. We have nothing to do with that. That, of course. But I have been advising everybody to shift from 1023C to 11. 11.12, that will be the best thing. Yes. There is no possibility otherwise. And in 11.12, they have only touched the 7th lip, advancement of any other object of
I appreciate.
That's all. I just wanted to say that.
The only problem that I have is that even in those types of trust, when you claim 11, you may have one of the objects which does not fall within the earlier 5 limbs. It falls within the general limb, and then that you could have a problem. And again, I'm worried, sir, not because if somebody reads the law well, no problem. But 143.1 they match our tax audit report with your income. They will say that in your objects you have one clause which is advancement of general public utility, 215 proviso will apply. The algorithm reading of your return is something which is going to create a problem.
Sir, I talked to them today only. I said, suppose I am 1023C, my objects are written there. Can I pass a special resolution saying that I will not do any other activity except education? They were not giving me any answer to that. Because they said judgment is that you cannot do any other activity. If it is there, it should be solely. I'm saying there is a solely, but I was given because in Bombay or the public welfare trust, wherever the act is there, it is very difficult to change your objects.
I appreciate.
Other places you can do it.
I appreciate.
But there it is very difficult. And when you Bombay, you are there. Yes, sir.
That's the problem, sir. Somebody is sitting in. I have great regard for all of you who are sitting in Delhi near the corridors of power. Please ask the Supreme Court. Do they know how many states in India have legislation concerning charitable trust? I'm sure they don't.
Do ye states, sir?
Pata hai mujhe. So that is the problem. Anyway, let's go further because Akhil also has to deal with quite a few things. So 20 is information about 1310 when it is attracted, when there is no maintenance of prescribed books or 215. 21 to 27, there is a very exhaustive details of voluntary contributions, including those with a specific direction. That will entail a tally with. Why I'm saying this is because ultimately I know that practically auditors themselves will be doing all this. So therefore, you will have to ensure that in your income expenditure account balance sheet, what is appearing is now being adequately reconciled with your details in the annexure. Otherwise, that mismatch would create problems in its own wake. So that is clauses 21 to 27. We don't have time because, as I said, normally in Mumbai, I speak on Form 10B for 3.5 hours at least. So therefore, anyway, going forward.
But I was saying to them, organizer, that the 2 hours is hardly anything. You should have part 1, part 2, part 3, sir, Sanjay ji, because 10B itself will take 2 to 3 hours.
Sir, we'll do separate session for that. This is only a curtain raiser, sir.
It's only a trailer. It's only a trailer.
Curtain raiser, sir. Curtain raiser.
It's only a trailer.
Yes, sir.
Okay.
So I have a different proposition, sir. Just in between, I'm saying, because I am allowed now, as per rule, only 2 webinars. One I'm going to do it on domestic, and one I'm going to do in international. But I am not stopping here. I can record your lectures and I can put on my DLH portal. So we will be coming back to you for that also, so that the time constraints are not there. So we'll have there also. What we'll do it on Zoom. We'll record it and then we'll put on DLH. Piyush bhai, we'll do something new. Yeah, please continue.
Sir, all participants should get your complete benefits.
Okay.
Ensure that that's the objective, sir.
Okay. So we'll go further. Clause 28 deals with income other than voluntary contributions because ultimately you have to tally everything. 29, which I discussed with Giriji, is income applied outside India, which is in accordance with 11(1)(c). There may be scenarios where I, as a charitable trust, are required to spend monies outside India. But that is application for purposes in India, only the remittance qua expenditure is abroad. Because there are so many situations where I'm required to make a remittance to a person outside India. That does not mean the purpose is not within India. So when you refer to 11(1)(c), to my mind, it's a very, very restrictive clause. So therefore,
11(1)(c) is different, sir.
Yeah, I appreciate.
11(1)(c) is only for in which India is interested.
Correct.
That is a different thing. Here it is 11(1)(a). Whatever you are.
So they need to clarify that. It is what my thinking is, because otherwise there is confusion.
You are applying for the purposes in India. You come under 11(1)(a), not 11(1)(c).
That's right. Clause 30 and 31 deals with application of income, details of payment in excess of 50 lakhs. I don't see any issue. They probably want to correlate that with the payee's overall income and things of that sort. 32 is the net result. 33 is specified income, that is income arising from non-compliance with various declarations, that is 115 BBI. I'll not get to that. Clause 34 is anonymous donation. Clause 35 is deemed income. Clause 36 is assets transferred. 37 details of application out of sources other than income out of current year. Now, this is where one thing as chartered accountants we need to tell all our clients now, that virtually your accounts have now to be maintained in a manner that they are capable of a fund flow analysis. Because both in the audit report as well as your ITR 7, which possibly Akhil will quickly deal with, is that you are required to establish the source of your application. Now, you can establish, like Giriji said in his initial remarks, that मैंने 15% जो excess है वो मेरे पहले वाले income से दिया. For that, you need a fund flow. And for that fund flow, you require to maintain accounts in a particular manner. That is something which you need to tell people, because that is going to be now universal. So this is something which I think you need to educate. It's virtually, you need to have a technical guide on accounting of charitable trusts also now. Anyway, going further, details out of application out of sources of other than income out of the current year, accumulation, withdrawals and things of that sort. 38, application by way of payment or credit in excess of 50 lakhs during a previous year to a single person out of income referred to in 37. Now, here is where you have those complications arising. Take a case, Giriji referred to 9A. I could not spend my entire money. I received, say, a donation of 2 crores on 29th of March. I opted for 9A. And then I spent from that 2 crores some part here, and I also spent out of my current income. Now, for a reporting mechanism, I need to classify I spent out of what. For example, I gave a payment, 2 crore मैंने मुझे मिला, बाद में 1 crore का और income मिला. I paid 3 crores to a contractor. Now, 2 crores will get reported in a different clause. 1 crore will get reported in a different clause, both in excess of 50 lakhs. That is where the real, complexities start arising, because you have to report more than 50 lakhs expenditure out of current income, more than 50 lakhs not out of current income, both. So that is where there is a composite payment, which happens to be a payment by way of utilization of 9A, utilization of accumulation, and utilization of current income, you will have some problems which you will have to deal with. Clause 39, again, an assertion as to whether conditions of 215, 38, etc. Clause 40, in a case where SSC is approved under Section 80G, releases expenditure. I don't need to take much of your time on that. Very, very specific cases will apply. Clause 41, because here you have to report the list of specified persons. And apart from the normal specified persons like author of trust, etc., those are simple enough. Simple enough, not so simple enough, because you will have to give all their particulars, included their PAN number, etc. More importantly, those specified persons will include persons who have made a contribution of up to 50,000 by the end of the year. Those will become also specified persons. So you need, as an auditor, to obtain an assertion from the auditee that what is the list of that persons. Author, trustees, relatives तो आपको मिल जाएंगे. ये कहाँ से लोगे? That assertion you will have to take independently from the auditee, because it is only then that you will be able to make a assertion in regard to the truth and correctness of this assertion. Details of transaction with specified person, clause 42. Now here, the clause says that payment to a person, whether it is adequate or inadequate. Now, what is going to happen is that this is a combination of fact and opinion. So therefore, the auditee obviously will say that whatever payment he has made to a specified person is for adequate consideration. But as an auditor, if you want to certify it that it is true and correct, then you will have to form your own independent opinion as to whether it is true and correct on the basis of your own experience and analysis. And this is where I think you will have a fair amount of difficulty. Clause 43 is violation in resulting in rejection, cancellation of registration. There are two or three, pardon me my saying this, but there are 115 TD is one of the most obnoxious provisions on the statute book. Obnoxious is the only word that I can use, because now 115 TD will apply if I don't apply for renewal of my registration by the specified date. I have never seen such legislation that if I don't comply with a particular deadline, you have to treat charitable trust liberally. You will invoke 115 TD. I just don't understand, but that appears to be what the proposition is. And I dread reporting under these clauses, because once you report a violation, a specified violation, 12AB cancellation kicks in. Once that kicks in, you have 115 TD kicking, all consequential. So I think there is something which you really need to seriously analyze in regard to this reporting. Clause 44.11.6, I think there is nothing much that I have to comment on. 45, if an exemption has been claimed under any other provision other than 1023C, obviously 11.7 now provides that if you are claiming exemption under either 1023C or 11, you don't claim exemption under any of the other clauses of section 10. Well taken, and I think the correct provision, but here reporting in that regard is required. The last three clauses, 46, 47, and 48, amusing, because what they are asking is, they're asking for information which is actually unrelated, in the sense that you are 11 and 13, but they are asking for whether I have committed a violation under SS, T, as well as 269 ST. So they want that information also, so that they would charge you in that regard also. So that is something which otherwise normally in a trust audit, you will never look at these clauses, especially not necessarily 269 ST, but now you have got to report on that also. As far as, since we are on SSST, which deals with loans, there is one small, again, out of my syllabus, because not my topic. Giriji rightly said that, yes, if I have a 15-year loan, how can you stop me? The question of interpretation is only this, though I would interpret it that way, saying that suppose I have a 15-year loan, if I take more than 5 years to repay, will I lose those 5 years also? Or I will be entitled up to 5 years, and beyond that I will not be permitted. I think that seems to be
that is true, up to 5 years, sir. So whatever I paid up to 5 years, but initially they take, sir, interest. They don't take principal amount.
Yeah, I understand.
Initially they take interest only, and when the interest paid, that is allowed. But what about the principal amount?
What about the principal? I agree. Clause 49 is again an information clause. They are asking you as to whether, if you are required to deduct tax at source, whether you have appropriately deducted it or not. It is a reporting mechanism. After these 49 clauses of 10B form, you have as many as 28 schedules, which are all giving particulars, all fine. I have no quarrel with the schedules because they are compilation of information. But मेरा ये मानना है कि 5 करोड़ के ऊपर भी जो ट्रस्ट है, whether they will have the wherewithal to compile all this data, and it is not as if those schedules are absent in the less than 5 crores. As I said, यहाँ 28 schedule है, वहाँ भी 7 है. So ultimately, I would suggest, Sanjay ji, as a matter of that, one, they extend this for one more year. Let people be educated. You prescribed this form in February 2023, and you are expecting people to comply. And effectively, I agree with Girishji that effectively your audit will have to be completed by 31st of August, because 9, 8, 10 अगर मुझे उस तारीख तक भरना है तो मेरी audit भी उसी दिन complete होनी है. So I have from today precisely 4 months or even less within which I have to complete my audit and ensure that I verify that all those schedules are true and correct. It's an Herculean task, and I don't know how people are going to do it.
Let us Piyush bhai note this also, as we have noted that Akhil, please also note this, that we can make a representation the moment we come on the nearest to the date.
One good thing, Sanjay ji, I always believe, and I'll just now hand over to Akhil because he has to travel from CSR, FCR, and everything in last those that they call death overs in IPL that he has to do now. What I feel is that I'm extremely happy that I no longer do audits and I practice only in direct tax litigation.
Same here, sir. Same here.
क्योंकि मैं हमेशा कहता हूं कि उससे ज्यादा क्या होगा, if I am not totally negligent, थोड़ा सा client का नुकसान होगा, मेरा तो सर नहीं जाएगा.
Thank you, sir. Thank you.
Yes.
But
And now,
we can't say to the young chartered accountant, don't do this, don't do that. It is not possible. Now,
no, I
at your
appreciate
age,
it.
you can be choosing. At your age, I can be choosing. But at the young age, you can't be choosing. They have to do everything.
Then our job is at least to sensitize them, to warn them of what is going, because I frankly agree, again, not related, but the way that PMLA amendments are coming, days are not far. Days are not far.
I just wanted to add,
yes.
Specified income is taxable under 115 BBI.
That's right.
The other section, that 115 TD, is another section.
Absolutely.
That is not for specified income.
No, I appreciate. I'm talking of specified violation अगर हो जाता है तो then
वो violation वहाँ है. लेकिन specified income and 115 BBI, there are 3 sections for taxation. 164(2), 115(15) TD, 115 BBI.
Yes.
You go mad, taxation. Not one section now.
And
3.
that this is taxation of charitable trust.
Yes. 3 sections.
Yeah. Anyway, I think I'll stop and leave the floor to Akhil and.
Thank you, sir. Thank you, Anil. Without asking for the time, sir. No, we'll not discuss. We'll have a questions immediately for both the panelists. Akhil bhai, you can immediately start, sir.
Piyush bhai, we request Anil Sathe sir to remain.
Yes, sir.
For the question.
Yes, Anil bhai, sir. Yes, Akhil bhai. Akhil bhai, you need to unmute.
Yeah. Good evening, everyone.
Yes.
Respected Girish ji, dear Sanjay ji, and dear Piyush ji, and my co-speaker Anil Sathe very sweetly complimenting about my black hairs, which I have nothing to do. That belongs to my genes. My father, who was just practicing for last 55 years on charitable trust, Shri B.S. Jindal ji. Everything I owe everything to him. And
my hair were also black. Now, because some problem, I just turned into hair.
But only he has very sweetly, he has given me a very daunting task. The daunting task of circumventing the word, just like Lord Ganesha was given, and the Kartikeya, there was a competition, and Lord Shiva, and they bought a Narad bought a mango, that we can have knowledge and wisdom. They said, whoever circumvent the word the fastest way, they will get this mango, and they will have the sweet mango, and they can do that. And my co-speaker has given me the task of covering the entire compliances, which, as everybody agreed, is impossible to circumvent the word. The only way I can do that is with the blessing of Girish ji, who's here. So maybe possibly by circling around like Ganesh did, circling around parents, Lord Shiva and Parvati Devi, with blessing of Girish ji, I can do that and try to cover some of the things. Thank you. Thank you. Thank you for your blessing, sir. Now, compliances with regard to trust, they are itself like doing brush in the morning. It's very difficult, very difficult. And most of the people who are honorary and most of the people who do not take it as a business, it is very difficult to even make them understand that with trust every day and with new amendments for the last 20 years, we are saying we're getting every year, we are seeing new amendments which are making it more difficult for everyone. So we will try to cover some of the compliances which people sometimes are not aware of, and how do we cover and what are the recent amendment on those amendments that we will be able to do that. We can start with there's so many, I have sent a mail to everyone also. There are so many compliances as a charitable trust one has to go through. Starting with I'll just give a brief and then we'll discuss each one, where is the amendment. Starting with the registration, which was amended last year. Earlier, we used to have amendment, which used to be lifetime. We had 12 and 80G, which was lifetime. And that has been changed to a provisional registration. The department would have done that every trust registered should have by default given a provisional registration, and then they could have applied for. But by their own wisdom, they wanted everybody to apply for a registration. Then without practically seeing those documents, what you were filing at the end, it was at the COVID times. Whatever document you filed and you were getting a provisional registration. Sometimes maybe the existing trust, they were supposed to be given a regular registration. They were also given a provisional registration. Then they bought notifications and amendments and then continuations. So one of the topic we are going to cover the registration, and there have been certain amendments. The next topic we are going to cover the 80G registration, and along with that the form 10BD, which date is very nearing. We have to file the various donations. If you have to be eligible for 80G, the donee, the trust has to file form 10BD, and we have to give so many details in that form. Earlier, in our Indian society, it was if you give on charity, you don't have to tell anybody. Even when your right hand gives the donation, the left hand should not know. Now, but the income tax department wants each and everything: the name, the address, the PAN number, the driving license, your ID, your amount, the purpose of the donation, whether it has been utilized or not utilized. Then we will talk about the biggest challenge about annual filing of income tax return, ITR 7. They practically every day in Delhi, I am getting a call. Now, earlier the demand, which is CPC processes, used to be in the range of lakhs. Now the demands have catapulted to crores. I am getting demands to the extent of 600 crores, 1,000 crore for trust where the returns or the ITR 7 has not been properly filled. And when you go through those returns, definitely there has been some small mistake or small proper filling or double filling or duplicate filling of the forms where the demands, the income has either been duplicated or the income, the particular column has not been written, or the registration 12A has not been properly written, or earlier form. So you're getting big demands because now the processing is done by CPC. If a small mistake in your ITR form 7 makes your income fully taxable and you get huge demands ranging from 1 crore to 600 crores, then maybe we'll also talk about the maintenance of proper books of account. There has been an amendment in August 22 there was a notification which was brought in by the department. Now, maybe the Companies Act, there has been books of account to maintain, but for the trust, Rule 17AA, they have specified a huge list of books of account. I wonder how the ordinary people, the trust and society will be able to maintain. They want list details of everything, their cash book, ledger, copies of bills, original bills, corpus fund donation, application of donation. Apart from, as Mr. Anil Satiji pointed out, about the fund flow, the requirement of keeping books, I feel that it is even lengthy than you do it for commercial enterprises. It is an impossible task, and everyone whosoever will be maintaining and auditing those books of account, I wonder whether we'll be justifying it. The only way to do is not to do that, not to do the audit or not to sign the audit report. The books of account is a huge list. Then especially the form 10BD, which is for donations, whether if you don't give the detail, whether this will become anonymous donation if you not give a particular PAN number of the donor, whether it will become anonymous donation. Now they want reconciliation with Form 10BD, which has to be filed by 31st May, and to reconcile with your audit report and reconciliation with the income tax return. And I wonder how much notices will be issued on this basis, whether you have not, if you don't fill in all the details of your donation into the Form 10BD, whether other donation which have not mentioned in the Form 10BD, they may not be taken as anonymous donations. Then utilization of income, as we discussed under Section 11, whether 85% and 15%. My very respectfully to sir, there has been various judgments also that with regard to the 15%, there has been a judgment that the assessee has not to do. This is a deemed deduction which has to be allowed. And in various cases also, anyway, I understand, definitely, logically, as a chartered accountant, we cannot believe if it talks about 15% accumulation, it has to be accumulated. But there were judgments earlier also when the AO used to add that you have not accumulated, you have not separately put into a separate account. The court said no, for 11, this accumulation of 15%, it is a deemed like a standard deduction. It is a deemed accumulation allowed to everyone. That was there. I think that was the reason.
Right, but let me tell you, you are right. I am not denying that fact. But I am telling you, when I've spent 2 crore out of 2 crore, where is the deemed application?
But it's like,
tell me what standard deduction kahan se ho gaya? जब 2 crore आए 2 crore खर्च कर दिए, where is the standard, where is the deemed application? वो तो केस ऐसे होगा कि उसने 1 crore 30 lakh खर्च किया तो 15 मान लिया गया. That is a different thing. वो केस पे ऐसा हो सकता है 15 मान लिया गया क्योंकि 15 उसने कहीं तो रखा ही है ना. He has used it. Either he has used it and put it under 11.5 or you has later on used it. तो मेरा point वहाँ ये है कि सर पर्पस ये है, if any amount is set apart or accumulated, so much of the amount set apart or accumulated which does not exceed 15%. लैंग्वेज तो ये कहता है ना, वो लैंग्वेज तो चाहिए ना सर. कोर्ट के केस तो बड़े होते हैं, कोर्ट के केस तो सुन लिए ना. अब तो रविंदर भटजी ने जजमेंट दे दी, बेड़ा गर्क हो गया ना सबका. सेक्शन 215 के ऊपर जो जजमेंट आई है, या जो अहमदाबाद अथॉरिटी की, वो तो बच गए, 1046 से आ गया. बट आपने सोलली एजुकेशन करके देख लिया ना 1027 से कितने केसेस हैं, सबके सब ओवर रूल हो गए. क्यों जी साठे साहब? ऑल केसेस हैव बीन ओवर रूल्ड.
Yes, sir. Yes, sir.
What can we do? Sir, ये केसेस मत बताओ सर, गलत चीज ना बताओ, फंस जाएंगे.
No, I'm just, so the only thing is 15% used to be, you see, it was a very simple law. When the law came, maybe I think the 11, 12, 13, it used to be received payment account. They said everything which comes in will be your income. Anything which goes out without accrual, without everything, it will be your application. And if you violate anything, section 13, it will be taxable. But over the years, depreciation, accrual system of accounting, corpus donation, so many amendments, nobody's understanding. The department itself does not understand itself. It was a very simple law. Anything you receive is your income. Anything which you spent, actually outgo, it will be application. And then anything you want to do, like for hospital or a school, you take 10 years accumulation, very simple law. But now, with so many amendment, court decisions and amendments and further amendments, and nobody understanding, even the lawmaker does not, they have made a mess out of this. The 11, 12 and 13, if you see, they have really made a mess. Now with the new amendments.
Akhil, let us not pass any judgment.
I'm saying it has become so complicated, even for all professional to have an audit report and to file these income tax form. We are facing so much challenges that nobody can do that with their properly. Even in the audit report, as I said, filing that what is the application. As an auditor, it will be very difficult to fill in that column, that what is the application. I will take one by one the various amendments and the compliances we have to do with regard to each and every one. Specifically, the 12A and the registration. So normally 12A, which was then again 12AA and 12AB and 1023C. Now the registration, all the trusts which was earlier registered, they were supposed to apply in a section. And at times it happened during the COVID, many assessees forgot to apply for 12 and 80G. You're supposed to file 2 forms, 10A. But they only applied for 1 form and the other form was not applied. And currently they don't know what to do. So maybe they're trying to bring a condonation And many of them did not, like the new trust, applied for a provision registration, but they have not applied for a regular registration. And now we have a law which says that if you have not filed a regular registration, your full income will become taxable under accredited income. So we are seeing that there has been so many amendments just to tax these charitable entities, where they should have been more liberal on that. And with effect from 1st April 2023, even they have widened the scope of term specified violation to include the application, whichever application which we are making, which is not complete or contain false or incorrect information to the attract cancellation of registration. So any application which online we are making, if has any information which is not correct or false later on, our registration can be cancelled and it will be withdrawn. And there is also the scope of exit tax has been enhanced to include existing trust failing to obtain re-registration and new assessee failing to obtain regular registration after obtaining provision registration. Exit tax is levied on accredited income at the maximum marginal rate of 39.44%. So this is something they made so much complicated for everyone. Whereas, as Mr. Sathe also very correctly said, they should be more liberal. They should allow for condonation, or they should be allow some law where we can do it. The trust can file within next 1 year by paying a nominal tax. Then with regard to ITR filing ITR 7, in the current year, if you're filing the ITR 7, there have been quite an amendment. The form pages is more than now 33 pages, and it looks like a machine language. You see, instead of a financial information, you go through the ITR 7 now, the recent amendment. Everything looks like a machine language. It is very difficult to fill up those forms. They have made amendment to Part A, General Part 1. They have introduced new clauses which says Schedule I, which used to be with regard to accumulation of income for 10 years, which was reduced to 5 years. Now they want more information. They have added two new columns into that, which 2 new columns of 6 and 7 have been added to specifically whether the amount has been properly utilized or not utilized. Last year, they had made an amendment with regard to if you have not utilized the accumulation under Section 11(2) within 5 years, then that accumulation was taxable in the 6th year. But last year, they brought an amendment saying that if you don't utilize within the last 5 years, then it will be taxable within the last 5th year. So they have brought this amendment into the ITR 7 so that it is amputely depicted and it is also clear into the ITR 7 form so that CPC can take up those. It is practically, what I understand, the ITR 7 has been made more computer or machine language friendly, more than the assessee friendly or professional friendly. So it's become quite a complicated issue. Then with reference to column 6, a new schedule IA has also been inserted, which specifies the detail of accumulated income in earlier assessment year as per Section 11(3), and following details have to be provided. They have been giving plethora of things. Now everybody think the professional has to do and fill up in the written form. And anything is not filled properly, you will end up by paying more taxes under that. Schedule I and Schedule IA against the row of accumulation being financial year has been added for everyone. Then there is a new Schedule D, detail of deemed application under Clause 2 of explanation. That has also been added in ITR 7. So once we are filing the return, it has become so complicated instead of reducing the columns or making it more assessee friendly, they are increasing burden on the assessee by putting more details. Even in the audit report, they have increased to more than, I think, 17 pages from 3 pages. The ITR form has now gone to 33 pages. There is addition of new column in Schedule J and Schedule J of new ITR. 2 new columns have been added, which in relation to total of amount invested or deposit back into the corpus. Because they brought some amendment into the corpus, as sir also said, guided sir. So those have been also brought in the ITR form. So it is very difficult how much for corpus fund. There has been amendment from 1st April 2021. Any corpus before that, you will have to show it separately. Any corpus fund receipt after that, you will show separately, whether it has been invested properly, whether any application has been made out of those corpuses. I think it is a big tedious task. Then reconciliation of corpus of Schedule J and balance sheet you have to make. a new schedule R has been interested. Can you imagine having a reconciliation of corpus now? So it is like bank reconciliation. You have to reconcile corpus from the balance sheet and with the whatever you're filing in the return form, with the old corpus and the new corpus. So one professional have to start really filling up those returns as early as possible. It is quite complicated, more than even the company law forms. And in schedule VC, voluntary contribution, you have to give detail of now domestic and foreign contribution for corpus fund, exclusive anonymous donation, then 115 BBC. So many schedule, even schedule ER, where we used to mention various expenses for revenue nature. Earlier, all application, whether for revenue or capital, they were allowed as application. Now even schedule ER has changed. So there is a new form, new schedule. One has to understand how much application will be allowed, what applications will be out, that will be there. We discussed, sir, the books of account with notification 622E dated 10th August 22. This is applicable for this year also. So we have to maintain a plethora of books of account, which needs to be maintained. So I think this is one of the most important, even Sanjay ji, this has to be discussed. There has to be separate webinar on this, that the kind of books, how can the professional and the SSC can maintain, or trust or entities can maintain the details books of account, and can we give a representation to the department for reducing this? This is an exhaustive list of books of account. Then specifically, we can talk about Form 10BD, which is a statement required to be filed furnished by the donee, by the trust entities or the NGOs to receive donation under Section 80G. If you don't file that form, the donor who have given the donation, they will not be eligible for 80G certification. In their Form 26AS, it will not be appearing, and they are supposed to get a certificate, Form 10BE. Once you file a 10BD, then you get a Form 10BE, where you certify that the donor has given so much of donation and it is eligible under Section 80G. But the main challenge is, how do you, if you don't have the full information of the donor, you have just the name. A person gives 5,000 donation as cash, which is allowed, but because he will not be eligible for 80G. So whether we need to fill that form, we need to fill that detail into the Form 10BD, or whether we can skip those details. This is also one of the query, because technically Form 10BD requires all details of the donors to be put in that form as statement of donations. But technically he is not eligible because it's a cash donation above 2,000. He is not eligible for a TG deduction. So whether we need to fill in that, whether there will be an issue after when there is an income tax return, we have to fill in those details. With regard to audit report also, when there will be reconciled the donation which are filled in 10BD and the donations we are declaring in VC into the ITR form, and what we are mentioning in the audit report. If they do not tally, what will be the consequences? Then definitely we require the ID, the PAN number, or the passport detail, Aadhaar number, driving license or a ration card number, name and address of the donor, nature of the donation. There are 3 topics. One, you can give either corpus donation, whether it is a specific grant or whether it is a general donation. So those has to be mentioned. If a particular information is not filled correctly at that point of time, whether it will impair the corpus donation, because earlier what we understood, if a donor gives you a letter specifying the specific purpose and it is for corpus, it is a corpus donation. But if Form 10BD is erroneously filled by the trustee or by the entities wrongly, whether it will still be corpus or whether the character of the corpus will change to general donation. So that is also one we need to, there's a challenge one has to handle. Then we have accumulation of income form. Sir has already covered that now we have to file those Form 9A and Form 10 2 months prior to even filing of the return. Whether we need a resolution, because for Form 10 always there used to be a resolution, but recently they say no resolution is required. Form 10 can be filed. It has to be filed. It can be filed through Aadhaar, OTP. But whether we have to specify a specific purpose, we should mention that purpose, because there was a lot of litigation with the department that there has to be a specific purpose. Only then Form 10 can be filed. And with regard to Form 9A also, what is the due date of filing? There have been quite condonation on filing of 9A and Form 10. So this is because with advancing this by 2 months, it itself has created the issue. The SSC and the professional were not able to file these forms by the due date, whether when advancing this date by 2 months, they will be missing the date, and again there will be huge condonations on this behalf, I think. Then the trust definitely have to do TDS compliances also. All the trust entities, sometimes they feel they don't have to deduct TDS, neither their TDS should be deducted, but all the trust entities have to deduct TDS wherever it is applicable. Plus, if their TDS is being deducted on interest or any other receipts, they will have to apply to the TDS officer for non-deduction of tax. But issue comes when all the charitable entities receive certain grants linked with some contractual obligation they have to do. The income tax department takes that any contractual obligation is a business. They say you are not doing this charitable work, you are doing some business. And any TDS deducted under 194J, 194C, or any other section, those receipts are seen with the obvious eyes. They say, no, this is not the charitable or charitable receipts. The income tax authorities want only 2 or 3 types of receipt. You should either have donation, or you should either have interest income, or maybe a rental income. I still feel there was quite an amendment in direct tax code which brought all very good changes to this charitable entities, but that never see the light of the day, and it fall. But so they bought everything that should be on receipt basis. But in the current scenario, all the receipts, wherever their TDS is deducted of the trusts and societies, they take it as it is a business receipt, and why it should not be taxed. So this also needs to be tackled. We need to have a representation of this issue also. Form 10BB and 10B audit report is already covered by Sir Anil Sati sir. So I think that is quite a lengthy form, and already one has one has a challenge on filling that. The other compliances which trusts have to do sometimes, because with this CSR, corporate social responsibility, and most of the companies now giving out or shelling out donations for the various entities, the necessary registration, the CSR, the trusts have to be registered with the Ministry of Corporate Affairs. They have to fill form under CSR 1. They have to file their PAN card. They have to file the copy of the trust deed, the list of trustees, the mobile number, and this form can only be filed with digital signature. So that is another challenge. With honorary trustees not having DSC, they will have to obtain specifically a DSC to register under CSR. And then again, they have to bring and give a utilization certificate to that particular corporate, that whatever funds they have received, they have been utilized properly, which is filed by the corporate with the Ministry of Corporate Affairs. But recently, the opportunity on CSR have really increased. So most of the trusts and society are obtaining CSR registration with MC. And last, with the government bodies also, it is mandatory, the CSR donation 2% of total receipt. So you have to register with Niti Aayog, which is the NGO Darpan site. And it is a repository which depicts how much trust is receiving donation, but it is become mandatory that any government company or PSU, any donation or any contribution you have to receive for any project, you have to necessarily register with Niti Aayog, which can be done at their site, NGO Darpan site. And lastly, when there is a foreign contribution, nowadays there is a lot of talk of foreign contribution, and they have been trying to tighten the noose on all the trusts and society which were receiving foreign contribution. And to that extent, they have mandated that all the trusts and societies will open designated bank account only with one bank at one place in a city. Like in Delhi, they say it has to be only State Bank of India at Parliament Street. And all those FCRA registration, and they have also issued various circulars. So any foreign contribution, if any trust is receiving, they should definitely get that registration under FCRA, which is by registration under Form 3 FC 3A and filing of return on FC4 by 31st December of each year. Then definitely again the Corpus fund also Sir said regarding 11(1)D. Corpus fund was totally exempt, and definitely for the trusts and entities covered under 1023C, this has been brought. But Corpus fund was always exempt under section 11(1)(d). But they have bought a new clause that you have to invest under the modes of 11(5). Practically, for all funds, any investment, all the trust and society were supposed to invest Corpus fund in 11(1)(5) only. If they violated, they did not invest any of their investment 11(5). There was violation of section 13, and the income become taxable for one violation also. So they are trying to complicate everything. My understanding is they are trying to complicate more laws, more compliances, even more than that, whatever we have spelled out. And it is, we need more workshops on this to make all professionals, even the lawmakers, to be more agile and sensitive to this compliances. Thank you very much. Thank you.
Thank you, sir. Yes, sir. Yes, Sanjay. Chairman, sir.
I want to make some points here that though we know that there are a lot of challenges before the professionals, but we should look this as an opportunity, not as a thing that we should be scary, we should be afraid of this, we should not do it. The thing is this, the sensitization made by the speaker is just for the information of the member that this has not become a simple thing. We need to understand, we need to read out, we need to discuss more. And then let me assure from the institute side that we are never criticizing the government like anything, but sometimes in order to sensitize, we need to tell these are the points which need a clarification or further explanation or amendment. However, for the purpose of that, we have made the group, and for the purpose of the member, let me assure that we'll try to make your life simple by the technical guide, which I intend to issue by any chance by 30th June. And for that, today's webinar is going to give a lot of input to all our panelists. And I'm sure that Sate sir, Girish sir, and Akhil Bhai will be devoting a lot of time in order to make that complexity into simplicity and making the life of the member more easy than what we think today. With this, I request Piyush Bhai to take the question answers and do the further proceedings.
Thank you very much, Chairman, sir. Very rightly clarified. And I'll take a clue from you and the Akhil Jindal because he said a lot of complexity, sir, to Ahuja sir and Sate sir. When 1984-87 tax audit came in for the first time, so people were, I have heard that there was hue and cry, but the government reduced the scrutiny. There was a compulsory scrutiny. Can that be an objective? Because I was hearing some panelists, this is as good as an assessment, this audit report. And if that is an objective, that scrutiny proceedings will come down because the assessment would be made by the auditor. You will get everything on the table. And if that comes down, I think so, then it's a good objective, sir. Isn't it, Ahuja sir? Could be that? Ahuja sir.
Anji sir.
Sir.
My point is, I am not, this tax audit when came, this was everything given on a platter to them. Everything given on a platter to them. But they are saying that we are hiding more than what we are disclosing. And that's why they are making 33 CD more complicated. More amendment. They have brought in so many things, which certain times is not possible to, implement it. Like 194R. 194R. Now, 194R, the purpose, the benefit which is given in kind or cash or partly in cash or kind. How will we be able to estimate? Now, 43B. Now, 43B about this micro and small enterprise. You are putting a responsibility on a chartered accountant to ask for on 31st March the list of the creditors and then to find out how many people are there, how much you have bought from micro, small enterprise, have you made the payment within that time or not? Otherwise, you'll have to show in 43B. My point is everything has been put on the chartered accountant. The department is putting every responsibility on us, and if we fail to do it, we are going to have tough time. I'm telling you, we are going to have tough time. Now we are
Piyush,
exactly the problem. Sate sir, kuch
Piyush,
Sate sir, that's what whether
my point is that I appreciate Sanjay ji's comment that ultimately, if the law has been amended, we jolly well face it. There is no option on
No,
that.
we face it.
What we need to do is that we need to sensitize both our members, certainly, that look, when you do an audit, it's a responsibility which you carry towards society. So we have to do it diligently, number one. Secondly, we appreciate the right of the sovereign to change laws. There is no quarrel on that. The only point that we wish to make is that, and that's a universal truth, is that if law, even if a bad law is well administered, half of our problems would get over. So I think the way forward would be to interact with the department to make them appreciate that, look, if this was the particular purpose of a legislation, then kindly issue the necessary clarification. Like we sensitize our members, they sensitize their officers to deal with situations, because these are phases. As you go along with this form being complex, there'll be initial teething troubles for maybe 2-3 years. In that period, if we have an approach which is cooperative in the sense that we advance the remedy and suppress the mischief, then most probably we will be able to sort out these issues. That is, I think, what is the way forward.
No,
Because
I'm not against. What I'm trying to explain. I'm not against anything. Whatever they are bringing, this is because now technology, they have more information. They have more information about you than anybody else has. I may not be having my information. They have my information completely. So technological things you have to accept it. You have to become honest now. Gone are the days. Gone are the days when you could do anything. Now I'm telling everyone, every day, kindly change yourself. It is not possible not to do anything of like that sort. But at the same time, let us not put every burden on a chartered accountant when the information is not pouring in from the department, from the client. We are facing a lot of difficulties. I'm not saying, I'm not against the law. Many very good things have happened. I'm not denying that fact. Why they have done charitable trusts, so much restrictions they have put in, the reason is obvious. What the people were doing, you all know that. We tried our level best to tell them, please go for tax on the colleges and medical institutions. They are ready to pay the tax. We wanted that. But the problem is department is willing. HRD is not willing. HRD says the cost of education will go very high. We will not accept it. So now everyone is going under charitable, although they are not charitable. Although they are not charitable organization, but they have no other, because they don't get recognition of any course or any degree unless they are charitable. The difficulty is the two departments. One department says we are ready to levy tax on charitable activities like school, college, universities, those who are private. They are ready. We are ready also. That we are ready to pay tax on that. It is better to pay tax than to go for this all exemptions and all that and put us into difficulty. But the point is, difficulty which arises is that charitable activity these days, they are saying you cannot take any profit. I don't have a balance where we can say that this is the profit I can earn or not. The judgment has come. I am not denying that way. But purpose is that when I am allowed to do incidental activity of under 11.4a, provided under 6 limb, then I can earn profit out of that. And if I'm applying the profit for application and for charity, difficulty should not be there. But the difficulty, the major contributor for this problem is the school, colleges, universities, and not the other charitable institution. There are very good charitable institutions who are doing really charitable activities. They are really doing very good charitable activities. I salute them. They're doing so much of charitable activity. But in between, the problem arises is educational institutions, medical institutions, which are making profit. But the problem is they are covered under charitable activity because they are not ready. I'm finding this difficulty. I'm saying laws are very good. They are finding out loopholes and they are plugging the loopholes, and we'll have to change ourselves. Gone are the days. Every client will have to change. One thing is certain. But at the same time, one should be very practical. Is it practical to do that or not? That's all. Is it practical to do that? Or not? I wanted to say something.
My
Yes.
only suggestion is we sensitize the members on the fact that when we do a trust audit, it is as important as we do any other audit.
But more
I
important,
take your
it
point.
is more
Yes, sir.
important.
Yes,
Piyush
Akhil.
bhai, can we have some questions?
Yeah, no,
So
only
that we have
yeah,
already
my-
exceeded.
Yeah, we'll take 2, 3. Yes, Akhil.
Yeah,
Akhil.
Yeah, my only take on this was largely the charitable entities were unregulated. Earlier in the lectures, we always used to say it was unregulated by the department. There was no center like SEBI, there was no authority. And so that is the reason. But again, coming to the receipt and the income, the trust, the idea, the initial 11, 12, 13, the entities never make income. There is no income. It is only receipt which has to be applied maybe in the 1 year, 2 year, 5 year, 10 years.
Right,
Where
sir.
does the idea of the profit comes? I
Right.
receive.
Sir, there is no question now discussing.
Practically,
You
all
have
I
to
think-
accept the law.
I think Piyush, you give
Yeah.
questions
You have to accept
if
the
it's
law.
important.
That's
That's
what-
in fact, this questions, there are 100+ questions. So I've tried to summarize. And
Yeah.
this was the very first question came in, that why this tax audit report is equivalent to assessment. There were many such questions. So I tried to clear that if it is akin to an assessment, then what happens? Anyway, sir, I will move it forward to another question, which is, of course, this repayment of borrowings on 1st April 2021. There are a lot of issues, sir. Sir, one of the panelists has asked a question. Because the law is prospective, the terms and conditions of that particular loan, which was taken as on 1st April 2021, why it should apply to that? That maybe I repay in 10 years, it should be allowed if I am not claimed earlier. That's whether that could be a good view, sir. Ahuja sir, you would like to comment, sir?
Sir, I am saying that I don't agree with that of 31st March 21 putting a restriction. But their purpose is, I talk to them, they say, we have discussed this matter, but the point is many people have taken the benefit of application when they have taken a loan. They took it as an application only. They say, we don't have a system to find out where they have taken an application, where they have not taken application. So we had to put something. So we have put a restriction that anything up to 31st March 21, we are not going to give you application if you are subsequently repaying the loan. So they had to draw the line. I talked to them. They said they had to draw the line. What can we do that? Because the amendment came from that day. They said we had to draw a line because many, but maybe wrongly, or even the department didn't know also. Many have taken the benefit of application by taking a loan.
Right, sir.
By taking a loan. So there was no other way. And so they have to done. They have done it. So I had to keep quiet. What can I do?
Anil sir, there's a specific question which says, what is the meaning of commencement of activity? There's a registration that from the commencement of activity, you should apply for the provisional registration. So what do you mean by commencement of activity per se? Whether that income should be considered or expense should be considered?
This is a question that is asked to me in many programs.
Right, sir.
The genus of the exemption is application of income. Now, therefore, merely because I collect donations, it does not mean I commence activity. My commence activity would be when I take my first step towards applying the funds which I have hitherto gathered. The moment I take that first step, then I have commenced activity. The commencement of activity may not necessarily mean money out of our coffers. I'll give you an example. Is that if I am in the activity of setting up a school, I apply for permission and I get that permission, then I would take a view that yes, I have commenced that activity, even though the application of income has not transpired. It's a matter which will have to be, tested at various forums. But I will say this much, that merely collecting money in my coffers is not commencement, because the genus of the exemption.
I fully agree. The difficulty is I cannot accept anything before I am registered.
I
cannot
appreciate.
accept anything before I am approved. Otherwise, I will attract 56 to 10.
Right, sir.
That is why the provisional registration should help you.
Sir has answered the other question also.
Very risky. Because they may say that it is not, we don't give you regular registration because you are not satisfying the conditions. So they will reopen the case.
Sir, Ahuja sir has also answered follow-up questions, sir. Sir, now one very question important, because 10BB and 10B forms are there. Anil, see if you can answer this. Let's take an example. A trust is having 5 separate projects or 5 separate schools, each having turnover less than 5 crores. Which form should I fill in? That's a very basic 10B, 10BB.
You audit the entity.
Right.
So you aggregate, that matter rests there.
So I aggregate all the revenues.
You are
beyond 5 crores.
You are the auditor of the entity, the person who is subjecting himself to examination before a tax authority. I may have 10 colleges. So all those are to be aggregated. If they are, I am the assessee and I am running all these 10 colleges, it is the aggregate. At least I have no doubt in my mind.
Partly, sir, it has been clarified also.
Yes.
In the case of section 1023C, 3IAD and 3IAE. They say it is per person.
Per person.
It is not person, not by institution.
Correct.
Per person. The person is the charitable trust.
The trust.
You go by the PAN number. PAN number, if the PAN number, you have more receipts.
If they have separate PAN, it is a different thing.
Right, sir. Right, sir. Sir, this 85% will be allowed. There's some confusion that if you give an 100% donation, 85% will be allowed if you give it to another trust. What happens to a donation in kind? I have a trust property. I have a medical equipment. I have a property, medical equipments from one hospital to another or a school. What happens? They're also 85% or how it would be, sir? Ahuja, sir.
Oh, yes.
Sir, my point is, when you receive a donation in kind and it has been applied, it means it is application full amount.
Correct.
Now, suppose there is a temple. Now, Bhagwan ke gehne diye gaye, and you have put it on the what you call deity. It is the application. You receive something in kind like rice, ghee, everything, and you have spent on a langar. It is applied. It is applied. You have received a house property as a donation. You have applied under 11.5. My question is, they are saying, sir, that you have to, you get a corpus donation and should be invested in 11.5. Right, sir? Now, 11.5, if I get a house property as a corpus, it is 11.5. But suppose I don't get a house property in corpus, I get some other items in corpus, let's say, what do you call, computers and all that, and something. Will it be treated as 11.5? The question is here. The point is, a property, 11.5. But computers, and these are not 11.5. It is a corpus donation. And when it is a corpus donation, I have to invest in 11.5. Then only I get exemption. But I have received in kind, and that kind is not covered under 11.5. Then what will I do? And there is one more also, that if you receive in kind, you can convert it into 11.5 in 1 year time. Or you apply it. So that is another problem which we are going to face.
Sir, this donation given to another trust, Akhilji, if you can come in now, that if I'm giving 85% is allowed, though that donate trust again uses 100% in the same year at the same moment. So I give 100 rupees and he also utilizes 100 rupees, still 85% will be allowed.
Yes. Because
I'll not get benefit. I'll prove it that dekhiye sir 100% kharcha ho gaya. So ultimately, what is the objective?
You see, there are certain. My view is my view is this. There are certain always deemed or artificial clauses, which even though you have applied 100%, you will only get 85%. Similarly, the law, because they wanted to club hole that everybody was planning. One trust used to give to another trust used to give to the third trust, and they were trying to shuffle this as application. So they have tried to bring it an artificial law or a deemed application that only, even if you give 100, you will get only 85%. So that people don't plan in that way. So that is my view, that for 15% is always believed it as an artificial or a deemed application. Even though you apply any deposit, you don't do anything, you get 15%. And with regard to 85%, now they bought practically a law for that. That is there.
Another, sir, a very specific, sir, in view of a new noble judgment, whether rental income will be taxable in the hands of 1023C, 6th institution.
I'm telling you, they have said that you can do anything only which is related to education. driving rental income, giving on property on rent, please don't be in section 1023C because the word uses solely. You can switch over to section 1112. I have absolutely no problem. But here, everything, they have said you can sell uniform, you can have canteen, you can have transport facility. That is part of the activity, which is there. But let me tell you, they are saying absolutely nothing you can do other than only. Now, I am asking a question. Central Board of Secondary Education is holding exams. And even Chartered Accountant Institute is holding exam. And you are taking the various colleges or schools on rent. Now, if that college or school is under section 1023C, what will happen, sir? This is a question I'm putting. What will happen? Is it their educational activity? Even Central Board is, Mr. Sanjay Agarwal wants to say anything.
Sir, actually, we are also facing this trouble. So now we are not giving them as rental. It is only the reimbursement of the expenses.
Sir, I am asking a question which you are trying to do.
Literally
These are not rentals.
Literally speaking, if you read para 76 of the judgment, it means that any activity from which they earn rent, which is not their own educational activity, is not permitted, is what Supreme Court says.
This is what I'm talking about judgment. Although Ahmedabad Development Authority judgment has been overruled by 1046A. But here this is the problem which remains.
I think somebody needs to sort of get these things, probably can be clarified through an
definitely.
circular.
Sir, we are noting so many theories are there. As we are discussing,
I'll Piyush suggest one very small thing, very simple thing.
Right, sir.
Is that something which is in the nature of passive income, like renting, that ordinarily should not hit. So I am still existing solely for education. It's like when I give my property out on rent to somebody else and just earn income. I have no other involvement in that activity. That is passive. So when you say existing solely for education, I still exist solely for education. I have merely utilized my property in a passive manner, just like I keep FDs and earn interest. Would you say that interest is something which vitiates my solely educational objective? My thinking would be no. So if the income is passive, then I think it should not disturb the solely activity criteria.
That interest is only for the purpose where I have to keep it in the bank. I am not denying that fact. But renting out the property to somebody is not my education purpose. There will be a difficulty.
I appreciate. So let them clarify that.
Yes, so we'll definitely, sir, go ahead clarification for that. Then I will take another one or two.
No, this one. All these issues with regard
we are already.
Yeah, I know.
Yeah, with regard to the rental.
11-12 में चले जाओ sir, 11-12 में चले जाओ.
With regard to rental, this has been quite phased, and I think they solved in the direct tax code. There was a direct tax code which
I know.
And everything, they solved all these issues which we are discussing.
We'll take last two questions, sir.
But it fell.
We are at 8:27. We'll take last two questions and then I'll finish it. I have to give vote of thanks. Interest-free loan given to another trust which is similar to NAA. What will happen to that? Would that be considered as donation or what? Interest-free loan, sir.
Loan is not a donation. 1 point.
So no application, nothing. No impact on.
No. Second point. You are not applying for charitable purposes. One, but there have been judgments where loan have been given and it has been treated. It is. They have said it is application. When you refund it, it will come income. The judgments are there, but let me tell you, legally you can't give loan. You can give loan to the students. You can give scholarship to the student. You can give loan to the school. But can a trust give loan to the another trust? The judgment is there that it can, but it is not. It should not be allowed, according to me. But judgment is there, sir. Loan given one trust to the another trust.
Now there are two ways. One is accepting loan, and one is giving loan. The trust can always accept loan from anybody and they can utilize it. But giving loan, then again the section 13 violation comes. If you give a loan to anybody, then it is taken violation.
So,
and
Akhil,
then
Akhil, this loan giving, let's not make a blanket statement, because accepting loan in certain states like Maharashtra is not permitted.
Okay.
Not permitted.
Not permitted. Okay.
You require the Charity Commission's permission.
You have an act.
So you have different state-wise also.
Yeah.
Charity Commission rules are also there, which will
Different.
come into play. Not only income tax rules,
Yeah.
which I can understand.
I think this is a topic where we can go up to the midnight.
Yes, sir. Yes, sir. So I'll not take further questions because we are 8:30, sir. Thank you very much to all the panelists, Girish Ahuja, sir, Anil Sate, sir, Akhil Jindal, sir. Sir, it was a wonderful experience and I'm sure it has been enlightened. Obviously, everybody knows Akhil Bhai ne to bol hi diya tha ki whether the charitable government is considering a charitable trust as any more charitable. They are considering as if they are not doing any charitable activity, and that would be an idea behind it. But we always think at the institute level, possibly, that if they have come with this application, which my chairman also said, if they have come with this particular forms, that is a trust possibly they are reposing in us. That once you give an audit report, then we can say, well, everything is available. I do not do a scrutiny.
Certainly.
So I always take it positively. Possibly, of course, we'll go with the recommendations all made by us, all made by the group. We'll go there. Wherever there are difficulties, we'll go there. If there are any difficulties coming, Chairman sir has assured that we will try to cover up that in technical guide. Also, I will request my chairman if we can have we used to have some groups during the audit period, if we can have some groups. So whenever there is a query arising, if those groups can resolve those queries. Because, sir, Chairman sir, there are more than 150 plus questions, sir. And now those are all small questions dealing with their audit. So, sir, we'll discuss that. If we can help them, we can have some group which can, in a week, for 2 hours, they can sit and just resolve the queries of the members. So they do not feel any problems in assurance services. So, very thank you, sir. I'll come back. Chairman sir has to speak, sir. Yes, Chairman sir, please, sir.
Office, please note down that all queries which are there, they have to be copied right now so that we can keep them for the purpose of the group. Group will be should be able to answer most of them, and anything which we are not in a position to cover in the technical guide, we'll try to get some clarification, but we are not promising. But office, please look into this matter.
Thank you,
that
sir.
all are copied.
Thank you, sir, Chairman sir, for immediate action on this. Really appreciate it, because when my members are doing assurance services, they have to be cautious. Our institute is saying, and we need to support that. Thank you very much, Ahuja sir, Anil Sate sir, Jindal sir, Chairman sir, all the panelists on this, Ramesh, Raman Seth ji, Girish Aneja ji, Kishore Shah ji, Piyush Kocha ji, Vijay Gupta ji, Pankaj ji, and my technical team, my secretary, my team for having this wonderful seminar, arranging this wonderful speakers, speaking to them and arranging this webinar. And thank you very much all the participants for their patience. Thank you. We'll end for the day. Thank you, sir.
Stay safe, stay healthy. Goodbye. Office, please close down the proceedings.